Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, which makes it 1100 UTC. A big shout out to everybody that's joining the stream live today, as well as everybody that's watching this on recording. It was great to see a lot of old faces, familiar faces on Monday's stream, as well as a lot of new people. So, it was really quite a lot of fun looking at Bitcoin. So, just waiting for a little trading view reset. We've had a little technical bug this morning, but that should all be fixed now. Part of the reason for being a few minutes late, so do apologise for that, guys. So how's everybody doing today? What are we today? Wednesday, gateway to the weekend. Hannah, brilliant to see you. How have you been, mate? How have you been? A very, very old school member of the Bird Nest, as well as a very loyal patron to the streams and Twitter. Gordon as well, good morning from Bedford, solid place of the world, maker of some exceptional British vans. Rick, hello, my friend. Good morning, good morning, good morning. So I think that I think it might let us do this. Let's get the screen shared so I can stop waffling on you. Look at my logo, and there we go. Absolutely magic. Darnock from sunny Spain, fantastic. And Whack, dear friend of ours from the Nest, how you doing, bud? Sebstar, morning. Evie just asked what's happening to Bitcoin. Well, actually, funny enough, I got the chart up here. I thought we'd just kind of carry on a little bit with Monday's theme, a little bit less educational today. Kind of take a look if you guys have got some alt requests. I have my trusty old pad of post-it notes here, so we'll make a quick rundown of those. Jao, hello. Good. Erica, hello, buddy. Welcome. Brilliant. Loads of people flooding in today. Fantastic. So, Wednesdays, for those of you that aren't familiar, we normally kind of turn our attention to what we call Altcoin Wednesday, just having a look. If you guys have got any requests for charts that we can take a look at, see if we can maybe spot some developing setups. We can look back over some older posts. Funny enough, actually. Hey, Touche. Welcome, buddy. Welcome. I was thinking, actually, one of the things someone asked me on the last stream on Monday, but we just didn't get around to it at the end, was to look at our Litecoin. So we started doing some setups a couple of weeks ago, looking at Litecoin, and yeah, one of those ones that really worked out quite well. But it was based off of something that was a little bit different to what we normally do. We were looking at this in terms of kind of support, resistance zones, area, pivot points. Basically, the point of that is, looking at where we can get potential entries, right? So without kind of waffling on about this too much, we can see the kind of, let me actually just go back to that quickly. So we can see the kind of the very basic analysis, right, that I give you guys all the time. No secret of mine that I'm a very proud student of ICT. I'm not an ICT purist. What I mean by that is, in terms of, I always recommend to anybody, if you want to learn from the source, absolutely go to the man himself, go to Michael. He's got a couple of brilliant free courses that are available out there. You need to really kind of commit and take your time to kind of work your way through them. And what I mean by when I'm not saying I'm not a purist is that I come from a traditional trading background of using moving averages, volume, candle patterns, ranges, etc. And that's not really something that Michael covers in his course. It's a very algorithmic based course in terms of looking where the interbank algorithms are firing. But I've always found that the signatures that are left are really, really, really key to understand. All right. So I just wanted to run through Litecoin with you, because I think this kind of provided us a really, really good example of how you can kind of combine different methodology. Right now, I know Michael's incredibly successful. I know a lot of people that very, very successfully trade purely ICT methodology, but you don't have to, right? For me, with trading, it's all been about kind of finding what really speaks to me, what resonates with me, right? And then taking that on board and really doing everything I can to understand it on the deepest level possible. Nitpar, good morning, my friend. Manny as well. Uriel, blessings to everyone. And my dear, dear friend, Nitpar is here. And also my man, QBS Graphics. For anybody that doesn't follow this guy, He is just an absolute beaut. One of the best graphic designers. Guy made my logo, the old logo I've got now, the new one that I've got on my Twitter account. And he's actually a very sneakily good trader, a very, very good trader. And is the man responsible for setting up all these wonderful live streams and that I bring to you. So a big shout out to QBS Graphics. You can follow him on Twitter for just some unbelievable alpha as well. Tammy, hello. How are we doing? Never late, my friend. Never late. You know I like a good solid 5-minute waffle before I get onto anything really chart related. So today, guys, we're all about your alt requests. So please do let me know if there's anything you want me to take a look at. We'll make a note of them. We'll try and look at 3, 4, 5, however many we'll get through. I don't believe that this man blushes, by the way. So let's just zoom out a little bit further here and see what this massive purple box is all about, right? So. Ahmet, greetings, my friend. Welcome. So, look, it looks really simple when you see it like this, right? But UTK, yeah, okay, no problem there, Jal. Perfect. So, on a weekly scale, this for me, people call it support resistance, areas, lines, boxes, pivot points, etc. But when I'm really looking at this, FET as well, Popescu, thank you very much. Apologies for the pronunciation of your name. There we go. So, as we're looking here, look, very, very simply, bearing in mind these are all weekly candles, right? What are we doing? We're pushing up into an area where we're finding resistance. What's this? This is what I call a strong close, yeah? Meaning that you've got a large body candle, more body than wicks, showing that the volume's in the body, price is getting pushed up aggressively. That's not necessarily enough to enter for me. What I want to see is what happens when price then dips back into this area, and we can see by this lovely long tail wick here that it's showing that it's gained acceptance. There's buyers stepping in, right? We then interact with this area again here, marginally here, definitely here. Look at the strong reaction that we get here when price comes in, right? Now, it's all about, for me, how we kind of read this, yeah? So imagine bouncing a ball, yeah? So you bounce the ball against the floor and you get this strong bounce away, a solid concrete floor, yeah? It shows strength. It shows that there's impulse, there's a reaction, yeah, there's a catalyst that's making that reaction bounce off. Then we come back into touch with this again. Look, strong reaction here, huge reaction here. Then when we come in here, look, we just don't get that reaction up, right? We can see that we're being suppressed within this order block here, right? So look, whenever I'm looking to tell the story of price, is I'm looking for a narrative, right? Now, if price is bouncing into here, if we're going to see the same reaction, if the buyers are going to step in as they did previously, then I would expect a strong move higher. However, when we get this muted move and we stop here, I'm saying to myself, okay, what's suppressing price here? What's capping price? And it's this order block, yeah, this up move before price dropped into this level, leaving this fair value gap between these two, okay? By the way, guys, if I'm going too quickly, if you've got any questions, please do just ask, and I will stop and run through it in a bit more detail. So we've come up and we've been rejected at this order block. And very importantly for me as well, if I'm taking a Fibonacci on here, yeah, we can see that we're holding under the equilibrium here. Yeah, the EQ, which is just purely the 50% of the order block. We're not getting any closes above. So to me, it's saying that actually the sellers are starting to get in control here. Yeah, we expected a bullish reaction. We didn't get one. We've been muted here. Yeah, price then does what we expect price to do. Yeah, which is search for liquidity. In this instance, it took out the liquidity below this low. Yeah. Then we saw another bullish reaction, right, which is natural when we've taken some liquidity. So for me, on a daily scale, on a weekly scale, so I'm not getting bullish here until we've overtaken this and we flip this area to support, right? Instead, what we've done is we've drawn up here into this fair value gap, right, which I do in grey. This is our weekly fair value gap. Yeah, and price has violated this, which is fine, right? We see this strong close above. What we would do is then monitor the reaction here on the lower time frames, looking for lower time frame long setups, possibly targeting liquidity above here or something on the lower time frame, right? However, what you'll notice is when we then come back below this, yeah, so we come above, yeah, and then we come back below, you see how it retests this area then as resistance, yeah? So what have we done here? We've set a high, a lower high. We've now set a lower low. Lower high, then the break below this low here, yeah, that's when we can see the continuation, right? We're still in a bearish market structure. So now when we lose this level, yeah, we come back underneath it. What we're looking for and you can see it very, very marginally, right? But we got the close below here, the body closes. Not interested in the wicks because this could easily be a deviation and price coming back within and then looking to go higher. The close below gives us the indication that we would then start looking on this day here for price to open, as it does, trade up a little bit, which we can see by the little wick here, and then continue downwards. All right. So we can then see it act as resistance, resistance, and now, yeah, we've got this strong close above, right? Look at the body of this candle. It's a powerful candle. So now, let me just extend this along a little bit. Now I'm saying to myself, okay, well, if we hold this level, right, then we could be looking for continuation higher, but we have to see it on that scale. And that's basically for a bit of context for where this box comes from. And then I'm going to explain to you what the trade setup was that we were looking at, right? And we did this back on the stream. When was this? We first covered this move here, which was when we had this fair value gap emerge. We were looking to short into this low. I'll show you on the low time frames. That worked out as a beautiful trade here. But then what we were looking for from this, as we had this bullish reaction through it, is for this to become an inverse fair value gap, right? Which I do in purple. Now, that's because we've got a bearish fair value gap here, right? Leading price lower. Where? To take out liquidity below this low, right? So we've run that liquidity. Now we expect a reaction. Price came into this area here. We expected continuation to the downside, which we got, down to the low here, which was our initial target. However, then price had a really strong reaction here, right? And ended up blowing right through this bearish fair value gap, leaving a bullish fair value gap, ultimately meaning that we're now looking for this after taking out this high here, yeah? We're looking for this to act as support and be a catalyst for a bullish move higher. So when we then drop this to the lower time frame, we can start to see the setup that we discussed live on stream. You can see this, when would this have been? If you go back to Wednesday, when were you looking at that? Yeah, so Wednesday the 28th, the stream on Wednesday the 28th, we'll take a look at that, right? And then basically what it gave us as we drop down through the lower time frames, we've got our daily fair value gap, we've got price holding that, right? And then what we can see here is we had this bearish fair value gap, right? Strong close above it. I'm going to drop down to our hourly quickly. And the theory here, right, is if we're coming up to here, we've got the fair value gap, which we violated above. This is our structure break. Price comes in, retests this. The boxes and the lines don't line up with anything, right? Because at the time we didn't have the price action here. What we were assuming, the lines are drawn based on the assumption of the arrow. Yeah, this green arrow that we drew. That's why it lines up with here, and it doesn't actually line up with the structure break, which was a little bit earlier. We were then assuming a fair value gap opened here, where in fact it actually opened here. Yeah, so we weren't actually far off with this, and all of that has come from the higher time frame, right? It's come from an understanding that price is probably going to be drawn back towards this area. It's come from the understanding that we flipped a bearish order block, yeah, into a bullish one, and then we've then found another bullish order block within this for price to then move higher. All the time taking the higher time frame analysis, dropping it onto the lower time frames to find our entries. All right. So as we can see, we got a really, really nice play out of this one. And in fact, then again here, looking at our inverse fair value gaps, what we had here, we came up into this level. We saw a strong rejection down. However, a lot of people saw this as bearish. But if we were taking this leg here, for example, we can see the price just came down into a fair value gap that was down in discount, giving us a really great opportunity to jump back on board with this if we believed we were going to see strength for continuation. Right, James 14. Yeah, good question. Let me show you before waffling on and actually really kind of cover what a fair value gap is. All right, so you'll see a number of examples of them, and we'll just pick one at random. We'll just pick this one, for example. Fair value gaps, and we've got a few on here that we'll look at, are a 3-candle pattern. Yeah, so in this case, you've got candle 1, candle 2, candle 3. Yeah. Now, what we're interested in is the gap between the bottom of candle 1 and the top of candle 3. So we see this gap in here See where the wicks haven't crossed over, where if we look at other candles, yeah, so we see a lot of fair value gaps in this move, right? But if you look at these candles in this area here, you see the structured price movement, how the bodies and the wicks are overlapping. It's not leaving gaps, right? That's the really key thing here. It's not leaving gaps. So the gaps are inefficiencies that price typically looks to go to rebalance, yeah? Imbalances, inefficiencies in price delivery, meaning that when I'm personally looking for targets, right, then I'm looking for targets above old highs and lows, yeah, where there's stop losses residing. That's why you'll often see reactions like this. We've got these clean lows here. What happens? Price comes into these here, dips in, we see that bullish reaction away, yeah? And then if you move that line down to the next low, which is here, we can see again price dips into this, comes back and has that bullish reaction. The other area that we would look for possible reversals or interactions are order blocks, yeah? So areas like this, the up candle before this move lower, it's at a point of support and resistance. This one comes back down into here. When we revisit it, we keep this on the chart. It should be blue. I clicked the wrong one, I did. We keep this on the chart, price comes up, we see the reaction in here, then that allows us to overlay that, right? And then we can look on that and say to ourselves, okay, can we find entries on the lower time frames? So a fair value gap is the 3 candle pattern, and we're looking for the gaps between them here. So we can see one here, yeah. We can see another one here, the gaps between these 2 wicks. You see how in being bullish, it gives us the opportunity to show that we've broken market structure here, low, high, higher, low, higher, high. This line here is our break of market structure. Okay, and then what happens? You don't want to necessarily just ape into this move, but this strong close above, we can then target the fair value gap that's left, which is this, right? And then on the lower time frames, we can dive in here, looking for price for bullish setups, ultimately pushing up into this order block, which we haven't engaged with yet, and on the lower time frame, looking for some other PD levels that we can engage with. All right, so I hope that's clear, James. If it's not, let me know. Happily run through that. Again, FTT, yeah, Yusuf, certainly. Have a look at FTT for you. So we've got UTK, FET, and FTT at the moment. And what about, from Robert here, what about the halving of Litecoin? Last time Litecoin was falling down around 1 month before the halving. Don't want to be a smart ass, just asking if that can be a thing that will send Litecoin down. No, not a smart ass at all, mate. Absolutely. Always ask questions, and it's a really good question. So for me, it's not really the type of trading that I do. We've got a really wonderful fundamental analysis team over at the Bird Nest who kind of look at that stuff on a deeper level. Yeah, for me, I mean, we've seen a lot of bullishness from Litecoin, right? There's always a little bit of a risk that you have the kind of buy the rumor, sell the news type event, right? Which is where you see a lot of bullishness building up to the event, and ultimately the event fails to really materialize. But as you said there, you can also sometimes see the opposite, right? Where there's a lot of speculation, there's a lot of uncertainty as it's coming in, and the price gets drawn down, being such a good value buy that it becomes appealing to institutions to invest. Typically, an event, obviously like a halving or that, is a very big event. It's removing supply from the market, so therefore creating scarcity, which is exactly what we're looking to do. All right. So done talking about the past price action. Are bullish or bearish on a daily basis? So I love these people. Crypto boy. Well, you know, that's what you've got to deduce for yourself, my friend. It's very, very easy to say whether you're bullish or bearish on a daily scale. If we look at Litecoin here, what do you want to know? Huh? So at the moment, on an hourly scale, what are we doing? Price is coming down, drawing down into this fair value gap, right? So if we look at this FVG, we draw this one across, just get that in a bit more accurate. Right, this is where price currently resides, yeah? So we're drawing down here into this fair value gap, right? We're also here on a very, very high time frame weekly level of support, yeah? So for me here, if I want to be bullish, I expect this fair value gap to hold, yeah? And then what I want to see is price get back into a bullish market structure, giving us an opportunity to enter, first targeting these highs, right? We would then look for a pullback into some kind of fair value gap here or order block before price moving higher. Now, the opposite is true. If price decides to do this, right, and really carves through this level, really not showing it any respect at all, we would look for this to become an inverse fair value gap, meaning we would then look for something like this, right? And then on the breakdown of market structure here, yeah, this would be on a lower time frame. We would then look to take shorts into liquidity resting below here and ultimately back down into these key levels which we've put on there. All right. Love you too, crypto boy. But yeah, exactly. Look, it's a little bit kind of more about being kind of bullish or bearish, but certainly if you want to know a specific time frame, what my thoughts on that are on it, I'm always more than happy to share, guys. So please don't hesitate to ask. Okay, nice one. Thanks. Got some more clarity on fair value gaps and order blocks. Brilliant. Yeah, thank you, James. It was a really good question, actually. I do go over it a lot on the kind of Monday stream, so I try not to do it as much on a Wednesday, just because I know a lot of people kind of tune into this that know that. But if you don't, do ask the questions. It's a really, really, really good group that we've got, and everybody's at a very different stage of learning, so everyone's always happy to help. And Robert, you are more than welcome. All right. So to react to public demand, which is, and I do agree actually with what Crypto Boy is saying, it is very easy to kind of look at TA in a backwards facing rationale in terms of, when you've got all the price action data in front of you to do it, with that, you can say, oh yeah, of course, I thought price was going to target this and do this X, Y, and Z. However, actually, one of the reasons I was showing this was I got a few messages actually on Twitter saying about reviewing this trade that we were looking to set up on there, because I think a few people took it and it ended up being a nice play. But let's look and focus on current price action, all right? And we're going to look and we're going to start with what was asked for first. UTK, wasn't it, I think? Let's have a look. Where is that on our list? UTK. Let's have a look. Let's go on the old Binance chart, shall we? Why not? Let's take a look at this one. So I'm not sure exactly what time frames you want, guys. So basically, I'm just going to look and do. Let me just get rid of the session breaks quickly. Just clear the chart up a bit. So do what we normally do. We're going to start on the weekly, just for any real kind of like standout high time frame levels that we want to be watching for. Let's have a look. Jesus, when was I last on? January 22. Brilliant. So something like this, for example, right? Now, when you're on the weekly, unless you see something really stand out, which I do here, but there is also worth noting what's kind of capping the market. That means if there's just any really interesting levels, right? So this, for example, was quite an interesting level because we got something clearly and obviously stopped the market there. Yeah, price came down, found a lot of buyers, had a reaction, had another reaction here. This is really key. So we deviate, under, over, price comes up, finds support here again, runs a liquidity above this higher before ultimately coming back, running liquidity above this higher, but failing to progress any further. And then again, we can see this, right? This strong close below. So this here was the weekly level that was run. We've seen a little bit of a catalyst from that there. So we're going to take our weekly fair value gap, right? SVGW, just to show it's our weekly one, and we're going to decant this down as we move down through the time frames, all right? So as we've drawn up into this now, if our expectation is for lower prices, we would be looking for reactions when price draws up into here, and then ultimately looking for price to come down and target liquidity below this current low. So we're going to draw that in. It's our weekly draw on liquidity here, all right? So now as we move down to a daily, we can see the daily paints a slightly different picture, right? So prices come down into here. We can see what's happened. Price is currently being suppressed by this order block. So all we're doing when we're looking for these is just saying to ourselves, okay, look, price, we can see these long upside wicks here, right? Price is clearly struggling to get above this level. So when we look left, is there anything? Is there an order block? Is there a breaker block? Is there a fair value gap? Is there something that's suppressing price here, right? Because quite simply for me, if I want to see bullish continuation here, and we've got, low, high, higher, low, this looks like it's now trying to push up to make a higher high. If we see something like this, right, that's when we can then look to get involved. Okay, you typically don't want to see these untapped highs run. Yeah, so what you'd like to see the price come above this, come back into here on the lower time frame, start to build market structure, right, and then push higher. And a good question here: how did you determine that order block there, mate? So what I'm looking for order blocks, right? And this is slightly different to ICT teachers. But like I said, I've been fortunate to learn under some really, really great people in this industry, no less than, like Trader SC, for example, ICT. And there's some really, really good guys out there, right? So what I'd say is find the best people. And then when you find that information that interests you, then go and kind of cross-reference it with other places, right? And find out what works for you. Because for me, what I'm looking for is I'm looking for this in a case of a bearish order block. Yeah. It's the last bullish candle before an impulse move lower. Yeah. Around a point of support and resistance. Yeah. So we can see around here, we've got this level, this consolidation, right? Before price moved higher. So this order block sits in line with this consolidation, meaning that it's sat down at support. So the up move there that then drove price down lower, that's the order block. If the order block is followed by a fair value gap, yeah, that for me gives it a little bit more, gives it more validity. So it's definitely an area that has like a higher level of interest for me. Hey buddy, great to see you. So that's how I determine that one. Now, you might have some people argue that, okay, there's this order block here as well before the drop. I like to take recency into account. Yeah, so this one here is immediate before the drop. And I think also as well, if you were to think that if people were looking to long this, yeah, so people thought, okay, we're at a key point of support here, which we are, again, when we look back to that prior consolidation over here. Yeah, this is the consolidation before this big move higher. It's very natural to think that we might get a bullish reaction here again. So as we do, then if there's people that have gone long here that haven't closed their position, people are holding this, you get this fast move down to the downside. People will sometimes hold these positions in large numbers, waiting for price to return to this area. When it does, they're incredibly happy to get out of their position at break even, right? So when they do get out of their position at break even, that's when you see this selling. Now, that's why we need to take into account that it might not be that the market's going even deeper from here. Yeah, it might actually be that price has gone up, people have offloaded positions, and now the market's making its ultimate decision. And in this case, it would be for it to move higher. So we've said what we've said on this in terms of if we regain this order block, we flip this from bearish to bullish, then I would look for price to be moving up. Yeah, we've got this key level of interest here, and it also aligns with this consolidation before the drop, right? So that would be the play there on a daily scale. Just going to get rid of that a second because there's something else that's of interest here as well. Now, pin bar candles are incredibly interesting. You see these long tails and short bodies with either a small or no nose at all, meaning the area that sticks out at the end. We can see the drivers that you get from them. Somewhere like here, for example, pushes price up. This one here leads to price pushing down. We've now got another one here, right? This long tail wick to the upside, showing that there's a lot of selling pressure. So what can we do in order to give ourselves an opportunity of confirmation? Well, here's our fair value gap, yeah? So FEG daily is set here. Make this grey to show that it's our order block. So now as we look down onto the lower time frames, our theory is this. If this order block, right, is being repriced for bullish continuation, yeah, then when we drop onto the lower time frames in here, we should see some kind of bullish catalyst here that allows us to draw price higher. So now we're going to drop down to our 4 hour. Excuse me if I take a sip of tea. Lovely. Right, so now we can see all of a sudden we're getting this really, really strong 4 hour candle that's starting to come back down. All right. So if I'm saying, okay, well, look, we can see that we're at support and resistance level here. Yeah. We can see support, resistance, right? We're now back in this realm, meaning that this order block here has significance. Yeah. So remember what I said, you're looking order blocks, they're at support and resistance levels, and you're looking to add confluence to your theory, right? Now, while we don't have the fair value gap immediately, we get a little one here, yeah? But at the moment, price has cut through that, okay? But we have to draw it in. It has significance, right? I know it looks very tiny and very skinny here, but actually, as we move this to the higher time frames, we'll see. We're going to label this up as our fair value gap. H4, right? Meaning our 4 hour. So what does price tell us here? Price tells us that on the higher time frames, if we're expecting bullish continuation here, that we want price to draw down into this high time frame fair value gap, yeah, find support here and look to drive higher. The other thing that we can draw over is our premium discount range. All right. Now, that means that in the upper half of this range, we're favouring shorts. In the lower half, we're favouring longs on the current trading range, yeah, or the expansion leg higher. So what we really want to see if we want a long are for long setups down here in the bottom 50%. Obviously, if we start losing these levels down here, then our attention flips. And if we were to come under here, for example, and then flip this order block to bearish, then I would expect us to make a run on these lows, yeah, and then maybe ultimately even lower down than that. But we're not looking that far ahead at the moment. At the moment, what we know is that price action is at an order block, yeah, at our 4 hour order block. Just going to get rid of this range quickly, right? That we violated this fair value gap here, yeah? So as we expand that out a little bit, we can see our 4 hour fair value gap, price has violated this here. Now, if we recover this, and then on the low time frame start to build bullish market structure again, then I'm favouring higher prices, right? At the moment, I'm looking to see how this order block holds, okay? So if we now drop down onto our hourly chart, we can see upon dipping into the order block at the moment that we're getting a bullish reaction, yeah? Now, what I would want to see is, how long have we got on this one? 25 minutes, right? If this closes here, yeah, I'm going to get rid of this higher time frame one here. If this closes and we get the fair value gap in here, quite simply, we're going to overlay the same principles, right? So this is our 1 hour order block, right? The fair value gap. So, and you see how we're kind of decanting this down from time frame to time frame, right? So quite simply, the same principles apply. We don't know if price is drawing lower yet, and we don't know if it's going higher. However, what we can say to ourselves is, with this fair value gap here, and this is under the assumption that this candle closes and we get this FVG, it might recover it, yeah, or it might continue lower. But if this is what we get at the hourly close, which I'll be looking for in 25 minutes, then quite simply, if we cut through this and again do something like this, build bullish market structure on the lower time frames, then if this holds, ultimately I'm targeting this fair value gap first and then looking for these highs. My idea on the market is that price is either heading for a fair value gap to reprice, or it's heading for untapped liquidity above a naked or untapped high and low, or simply an order block, right? So if we're expecting continuation lower, however, if price draws into here and we start seeing these breakdowns here on the lower time frame, then we can start looking for lower prices. All right. And this would be exactly the same that I would overlay on a Forex chart, that I would do on cryptocurrency, that we would do on legacy markets as well. So when it comes down to execution, I'll then drop to a 15-minute and a 5-minute chart. And although we don't have that at the moment, the basic kind of setups that we're looking for are something like this, right? You're looking for price to come down, take out a short-term low, leave an inefficiency, this fair value gap, draw back up into that. That's where we'd look to take our entries, right? Stops would go above the swing high or the origin of the gap. And then we would look for targets lower down, this swing low down here, but obviously this order block that we've got. So we would get in here as long as we had the risk to reward. You'd want at least a 1.5R to make it worthwhile, in my opinion. And that's only if you've got a relatively high win rate trade system, sort of, 60% and above. Obviously, if you're a swing trader or a trend trader, someone like Burb, for example, you can have a win rate as low as 30% and still be extremely, extremely profitable. He's probably the most profitable trader I know. Real professional full-time trader for sure, that's verified with his trades this year. But he has like a 35% win rate because he follows and trades major trends, right? Where for me, I'm looking to break things down onto an intraday basis and then kind of take short-term trades that I open and close in a day. So in terms of UTK and where we are here, I hope that hasn't just been all waffle. I think we're being suppressed by this high time frame order block at the moment. This one's offering us support. I think if we draw up into here and break down on the low time frames, then I think we target the liquidity resting under these relative equal lows here, and ultimately the liquidity resting here. In the same vein, if we draw down below this order block, retest it and start to break down, then my targets become this untapped low down here. If we reclaim this, yeah, because look, we've already seen the rejection of this high time frame order block. I'm not concerned about us driving back into this, because if this really is providing all of the sell pressure, price shouldn't really be drawing back here, right? If this is rejected price and we're strongly being batted away, then price shouldn't really be returning to here. So if we reclaim this fair value gap, yeah, get back above it, get into our bullish market structure, then I'm looking for higher prices here. All right. So at the moment, sitting to wait to see how this one plays out. So let's now go and take a look at FET as well, guys. If you want that kind of gone over in any more detail, if you've got any more questions about that, just trying to give kind of a broad top-down view of the different assets. I know some people trade on the daily, 4 hour, 15-minute, etc. So hopefully it gives kind of a decent overview across the different time frames. Right, FET. Let's take a look where we are on FET. Here we go. Right, let's zoom out to our weekly and do exactly the same thing again, guys. So look, if you've got any questions, there's not really a lot of. We won't be doing a lot of historical charting on the Bybit FET chart. If you do want anything longer term in terms of spot or position trading, then let me know, and I can always look to a Binance or a Coinbase chart. But very similar situation here, right? We've got our weekly fair value gap, which is currently holding price. However, price is holding quite well in here. Like with an order block, a fair value gap, if you're expecting a reaction, you kind of want to see it before the kind of equilibrium, in my opinion. Gold as well, yeah, sure, Nick, of course, my friend. So you want to see a slightly stronger reaction. You want to kind of drive into it and really kind of flick away. So we also have this, the last up candle before this drop lower. Yeah, there's an argument that it's at a support line. We don't obviously have the historical data, but we would obviously make ourselves aware of this. We can also see that we've had an interaction with it already. Yeah, when price dropped here, look at how when this wick just snuck in here, yeah, we see that immediate reaction away. But then it's come back in and it's showing a bit of strength to go up higher. Yeah, so let's just mark that with a W. You guys know that if it's that basically if it's grey, it's a fair value gap. If it's blue, it's an order block, and if it's orange, it's a breaker. But we haven't really covered much on that. Yeah, sure, Popescu, you're absolutely right. Yeah, let's just ping across onto the Binance chart anyway, because some people might want to see some longer term data. Because I trade with Bybit, so I always use the Bybit charts for anything in terms of obviously perpetual trading. So, okay, so we must have taken a little look at FET recently, drawing down into this fair value gap, as we can see here on the higher time frame. We've got the reaction that we wanted. We can see here, did we get this? This is probably a little bit more a daily play. Obviously, again, guys, these lines might not look particularly accurate because they've been drawn before this PA is taken out. Basically, what we were looking for is price to drive down into this level. We found support here. The expectation then was for price to come above this fair value gap here, like we were talking about earlier in terms of inverse FVGs, right, which we didn't have on the chart at the time. But this is our inverse fair value gap. That means a bearish one that's then broken through with a bullish one. Yeah, ideally with a bullish one. And then we're looking for this to act as support. So again, as we then draw down through the time frames, we can see here's the high, price come down to find support. We didn't push quite as high as that. But what we can see is that if we readjust this, yeah, it would be this here. Yeah, meaning that for the real ultimate long-term play, we're looking for shorts in here for short-term long setups, meaning that we've drawn down into this fair value gap. We found this support base. So we could have scalped some longs here, targeting ultimately the liquidity here. But in terms of position plays, I'd still like to see this base broken above for us to find support here and ultimately push higher up. Okay. So that's where we are on the daily. Dropping this down now to the 4 hour. And with our focus here being on the current price action, we can see But we got our play, price pulled back down into here. Yeah. We ultimately had the break of structure with our fair value gap. Let me just make that a bit bigger so you guys can see clearly. Yeah, see, even on a 4 hour, right? Price came up, set the higher low. This is the break of structure, yeah, which we can see here, which is MSB, like market structure break for anybody that doesn't know. We know where we're wrong, so our risk is down below this low. This would have given us a little bit of a scare because we would have been entering here on this FVG. If we were trading this on the 4 hour, that would have actually just been our 4 hour entry. However, on the lower time frames, we would have been monitoring this for lower time frame setups, right? So I'd imagine that we would have stayed out of this. We would have then seen this sweep of liquidity. When we then flip and we get back above this FVG, we can see this lovely pin bar candle ultimately targeting the highs above here, and then here, right? So targets 1, 2, and 3. You can see at the moment that we've kind of rejected here. So what's the play? Well, we've got a very small fair value gap in here, right? So, we can see that failed to hold price as it came back in. Yeah, so we would have been looking for this. If we expect price to push up to this level here, yeah, we would expect price to have found support here, and then we'd be looking on the lower time frames for it to push higher. Ultimately, it didn't do that. It's now broken down. So we're looking left again now. We're saying, okay, well, what's currently supporting price? Are we at a support and resistance level here? Yeah, we can see resistance, support, support. So if we then look and we say, okay, where's the last down candle before the move higher? This is our 4 hour order block. So now what I'm going to do is we've inversed this FVG. So the chances are if we leave another fair value gap in here, if we draw back into this, then I'd be looking for short setups to attempt and possibly violate this. However, at the moment, I'd be favouring looking for longs, right? Now, higher time frame, this is kind of still holding us within structure. 4 hour, obviously, we've now lost structure because we've set the low, lower, higher, and lower, low. But within here, if we're going to hold this and we are pushing ultimately for liquidity above here, then as we drop down on the time frames, Nemesis, thank you, buddy, very, very kind. Yeah, so now as we drop down on the time frame here, then we've got a couple of plays ahead of us, right? We want to kind of respect our premium discount. So if price does stop here, and this is our leg lower, then if we're expecting lower prices, we can look towards the fair value gap that's here. Do that a little bit darker so it shows up. And then we'll put H1 in there so that we know that that's our hourly. We've also got this volume imbalance here, yeah, that we could target. So without kind of drawing them all in, basically you're looking for your fair value gaps, your imbalances, your order blocks within here, that if price draws up into this, yeah, so let's say we hold this reaction, yeah, and we come into this, and then on the low time frame again, we do that, yeah, break market structure, then I'm going to be looking for lower prices here because we're being suppressed to this, yeah, suppressed. If we get above it, like we said before, then I wouldn't look to long this here because we're up in premium, meaning that it's a low probability in terms of the long plays because our risk is all the way down here and our first target is up here, so it just really wouldn't make sense. However, if we do really show bullishness here, right, and we overtake this, then I would then be looking in here for the structure that we create here, yeah, so that we draw down into, say, a fair value gap or something that's down here back within discount, and then from here we can then look for higher prices, all right? Hannah, listening to your commentary always makes me want to go back to trading crypto. Oh, I wish you did, my friend. We really, really miss having you around here. Such a good and talented trader, but it's it's a tricky game, guys. It really, really is. But I really am a strong believer that anybody can do it with the right application. You've got to find your niche. You've got to work incredibly hard at what your niche is and really understand it on a deep basis. But then I think where most people fall down is data, right? Just it's very, very alluring to want to sit and look at current price action and try and guess where price is going. But it's not really about that. It's about looking at what happens when price reacts at different levels and then working out if it's a good risk to reward buy or sell. Yeah. That for me, combined with really deeply understanding really deeply understanding your risk to reward profile and your money management is what will ultimately make successful traders. Do you think we should be appreciated Crypto Capo for his sacrifice? To be honest, Crypto Boy, I don't really involve myself in that world. I think, on one hand, I think he's someone, from what limited stuff I've seen, has never really been a shiller of anything in the space. Um, the flip side of it is people can get attached to a bias. Now, that's absolutely up to him. He's clearly a successful guy. He's got a hell of a lot more followers than me. And, he's sticking to his guns. The big question is, or his or her guns, I'm not sure. I haven't met them personally. But I think the big question is have you become married to a bias, meaning that you've been so obsessed with being right over being profitable that it's ultimately costing you? Or is it something that they've just got really, really strong conviction in? Not really one for me to judge, but I know there's been a lot kind of said and speculated. To be honest, I'm not, if you want really good shit posters, you want people like SZ and EXO and stuff like that. They love having it large on there. For me, I just stay quiet. I love my trading. I like to be respectful of other people and kind of always taught to kind of just try and stay humble, really. Any energy that I'm wasting on CT stuff is just stuff that I'm not, bettering myself, I would think. This guy is still betting for 12K. Yeah, I mean, you've obviously got to have a little bit of a giggle, but it could all flip around. Things drop to Hades and then he ends up being right. It's very difficult to know with things like crypto Twitter, right? There's a lot of people making a lot of noise on there. But when you find the good people, I would say just stick with those good people, find other people that they interact with. And if you follow someone like Trader SC, for example, then, you get the best of both worlds. Someone that's incredibly funny and does love winding people up on Twitter versus someone that's probably the most talented trader that I've ever come across. Trader Dank as well is someone else. Obviously, my fam over at the Nest too. Bast is an exceptional trader. Razor, Jay, a guy called Trading Tank. If you've not come across him, is unbelievable in stocks and shares at the moment. It's his main focus. But the whole team over there, in truth, we've got a great FA team as well. But, find the people that you like, people you get involved with. And then just what I would say is don't take anybody's stuff at face value, right? Stuff like this, if I'm telling you this is an order block, don't believe me. Go away and validate it for yourself and then come back on stream and say, well, actually, I saw order blocks used like this. And there's different ways. People call them demand and supply and demand levels as well, bits and pieces like that. What I would say is find what works with you, test the living heck out of it. Then when you're comfortable enough with the data, it allows you to take positions because you know that it pays over time. You just got to control your drawdown and build wealth over time. You're not going to, I say this and I stand by it, that financial reward from trading is purely a byproduct of a successful system or understanding your system really well. Erica, lots of love back to you. You too, Crypto Boy, and everybody else. Thank you for sharing the love, guys. Really, really feeling it today. So we've got like 10, 15 minutes left. I'm going to cover FTT and gold as well, which we both asked for. Hopefully this is clear here, guys. I think we lose this order block here. I think we start pushing down lower, right? We've got this fair value gap here. Yeah, even just on an hourly basis. So if we get the rejection, we come below here, we can look for scalps, low time frame setups into here, maybe even down to here, right? Targeting liquidity below there. There's obviously some keen stops to target. But again, if we kind of come back above here, I'd like to see this flipped and then let's kind of dip back in here to discount so that we can get a good long setup. And then I think we could really, really start to push higher. We've got all this untapped liquidity resting above here, but look at these, right? So here, you've just got some money resting, yeah? So let's do that. Put our dollar signs on there. Why is that? Because untapped, 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 right? So as we draw these down here, price can often love to run these things, whether it reverses here or not. What there is a lot of liquidity. So if the major players, the market makers, the institutions want to really push price up here to get everyone to go long, to open loads of buy orders and trigger all these stop losses, which are also buy orders, fill all their sell orders and nuke the market back down. Not saying that's what's going to happen, but what you'll notice is we've got a plan for every eventuality. Yes, it does take a lot of chart time, but ultimately it leaves us in the driving seat for our own decision making. And we don't get married to a bias, right? From here, I could say, this thing's going to the moon. It breaks down here and it stops me. My narrative or my belief then stops me from taking a nice short trade into here, meaning that what's happening is my beliefs or me wanting to be right is getting in the way of me being profitable. And that is not what I want, all right? So FTT, I think this might be another one right at the bottom. Let's get a new one up, shall we? We'll do a Binance chart. FTT USD. Oh no, we've got one on here. Let's have a look. Let's take a look at this one. Hang on, did I just? Oh no, I thought I just added FET again. One of these days. Is this how you approach price action on an intraday time frame? Yeah, absolutely. In fact, we'll look exactly at that on this chart page. Here we go. So, Popescu, you're very welcome. I hope it's been of use. Right, so weekly FTT, we're going to do this in gold. Wow. Christ. But that gap looked interesting for a refill. We didn't even get anywhere near it, did it? I mean, this is... That's quite astonishing, really. I mean, well, I would say that's the draw on liquidity, right? This massive fair value gap. Yeah, wow. That's unbelievable. We're going to focus here, I think, much more on the daily. Now, what you'll notice is quite tricky about these is we've got these rounded bottoms, right? Yeah, so you see these? Maybe not so much that one. It's a bit jaggedy, but we kind of built another one around here. Now, again, there's bigger experts than me in this space, but when we see these type of accumulation patterns almost, where price is driving lower, but in a very structured way, we see it start to shift the curve, yeah? And then what I like to do, what I used to do a lot more, is kind of looking at these key highs. I had this method that I would call a breaker line, yeah? And ultimately, what you're looking for is for a close above, and then you open a limit order on this line here, and you target the clear and obvious liquidity, which is here and then here. All right, so you would swing trade knowing that you're wrong if price comes back down below here. We would have had something similar here, I imagine, even though this was slightly bigger. Yeah. So we had the high that was set here. We get the final stage of price curving back around. You're then looking for that impulse higher. You don't enter here because price doesn't close, right? Price closes here. So you open your limit order, price comes down, tags your limit order, your stop loss is under here. This would have been a slightly trickier one, right? Because your first liquidity is here, yeah, because you didn't run it on this first move, you did on the second move, right? So you might actually on this one, because we've taken out the first stage of liquidity, what I would then look to do on a higher time frame is look to this fair value gap again. Yeah, to look for price drawing into here, look for low time frame setups, targeting this first. And then ultimately, it's quite tricky on this time frame. We'd be looking on the lower time frames for an untapped high over here. All right. But that's just, sorry, I'm going off topic a little bit here. But in terms of like a higher time frame, you'll see some really excellent people in the space doing that, looking at that as it kind of goes through. But as we are here on the daily, we've got a really, really nice bit of price action here for us to dip into. So what's happened? Price has found a rejection at this level here, ultimately reaching for the stops above this high. So that's still in play on our daily level. Where's price currently? Down in this fair value gap. So remember, our theory is that price is either searching out a fair value gap to rebalance it and then to reprice and decide, okay, found acceptance here, moving higher. Then we have ready-made liquidity targets of this high over here and this high here. Just going to extend this one a bit just to placate my OCD. There we go. So now as we drop down, we're going to go down to the 4 hour. See what price action's telling us down here. So, okay, so I like what I see here. We've come down, we've got this. Sorry, it should have made that our daily. So now we're on the 4 hour, we're saying, okay, well, same principles, right? If we were expecting price to drop here, so look, we had this drop, right? What happened? We left this fair value gap. Price came up, rebalanced it, repriced, decided lower prices were key. Where did we come down to? These untapped lows, and then we were held within this order block, right? So again, we're looking across and we're saying what's capping price or what's holding price, yeah? And at the moment, it's this, which is our H4 order block. Price has come into this, found buyers again. Very nice. Does it mean we want to take setup straight away? You can if it suits your risk profile. Absolutely, by all means. For me, I'm a little bit more cautious. I like to kind of get a bit of confirmation. So what would I be looking for here? Well, this fair value gap here, right? Now, we had this one here, yeah? This is our H4 as well. So let's make sure we mark these up. So what happened here, right? We expected price to draw into this, reject. So when we get that rejection, we look on the lower time frames for breakdowns, price draws lower. We know where we're targeting, the low below here. And H, what I'll do is remind me at the end of this, I'll use this one as an example of how we would apply these same principles on the lower time frames, all right? So now we've got this bearish fair value gap. We want to see it act like that one if we expect lower prices, yeah? Well, what happens? Price comes into this here, rejects, and blows through it. All right. Now, doesn't mean that this doesn't give us some intraday short setups in here. Yeah. I mean, it wouldn't because we're outside of our times, which I'll go into on the lower time frames very quickly. But ultimately, price has now blown through that. So what did we say in terms of inverse fair value gaps? Yeah. Now, we've now blown through this. So we change that to purple, or I change it to purple. Now what I'm looking for is price to leave these highs untapped because they're relative equal highs. So let's put that in quickly first. So that becomes my H4 target. These are our equal highs. Don't have to be perfectly equal, right? But it just shows that there could be engineered liquidity above there, which typically is a draw on price. Now, if we've had this strong close above not just the daily fair value gap, but also our H4 inverse fair value gap with a reaction from a bullish order block, for me, it seems like we're going for higher prices, right? So what I would look to do, drop this to the lower timeframes, which we'll look for in a second, and look for something like that. Now, we're also going to quickly review this and take a look at how that plays out on the lower timeframes, right? So what would I be looking for in here? Well, quite simply, I'd be looking for a fair value gap. So I want to see this close. Yeah, the candle isn't closed yet. We've got, well, actually, on the hourly, we've got 30 seconds. So we're going to see this candle close, which means that there is very much a likelihood that this fair value gap confirms. So this is our H1, right? So look at the support we're stacking underneath here, yeah? Order block, inverse fair value gap, high time frame fair value gap that we expect to support price that's currently holding it. So if our expectations for higher prices, which we see here, and the candle is now closed, so this order block becomes valid, and we're looking on the lower time frames, yeah, for price to come in, hold this level. Yeah, so let me just get rid of this quickly. Yeah, you see our fair value gap in here. We want to see price hold this, build bullish market structure, and then we're targeting that. All right. Now, on the break of this, and hopefully we'll get to share some setups on that in a minute, I'll show you the ones from previous ones. Again, I know it's going to be post, but just to give you an idea of the setup, we want to see a strong move through here with displacement, meaning we leave a fair value gap. And then we target that fair value gap for our entry, and our stop loss goes below here. All right. So what invalidates this? If price just moves up from here and takes this high, because if it's taken the highs above us, the resting liquidity above us, then the expectation is that we might see a breakdown pattern coming the other way. So if we've got this high, yeah, which is our high time frame, and let's say we get this move up here, and let's say price does something like this, gets back down below, break structure, right? Then once again, on this structural break, we see that strong impulse move here, right? This strong move down here. If this presents us a fair value gap, then that's what we would target looking for shorts, right? So that would be the setup play. Now, if we go back, and we'll take a look at this setup that I just discussed with Hannah. Where was it? Go back to the 4 hour quickly. That was it. This is the one we were looking at, wasn't it? So it was this bearish example. So this is just to give you an example, guys, of the kind of setup that we would look for, yeah? So this is our bearish fair value gap. The plan was, look, we didn't run the liquidity at the time. We had a reaction off of this bullish order block. However, we still needed to see this 4 hour fair value gap reclaimed, flip to support and move higher. Rejections in here, and there's an expectation for lower prices, all right? First targeting this low, ultimately then coming down back to this order block to see if this fully holds. this inefficiency here, the fair value gap, and below. Quick question here. By the way, Touche, thank you very much for smash the likes. Really appreciate that. H, we are going to cover this now. We're going to look at this low time frame setup. And Yusuf, yes, certainly, my friend. So a fair value gap is any break. You have a 3 candle pattern. In this case, let me zoom right in for you. This is candle 1, the down candle here. Candle 2 is this large, expansive white candle, and candle 3 is this. So what we're interested in is the gap between the first and the third candle. Yeah? In the same way that the gap between the first and the third candle here as well. Yeah, so this wick to this wick here. We can see the same thing here, this wick to this wick. You see how they don't cross? When you look at structured price action like we get in here, you notice how the bodies and the wicks fill one another in, yeah? There's no gaps, is there? So when we see these gaps, price often likes to rebalance them, and then basically the way I think of it is they're making a decision on where they're going to go next, yeah? So looking at this here, we're then going to move down to a lower time frame, in this case our 15-minute time frame, and we're saying to ourselves, right, well, what do we see in here? If price is coming in, we've got the FVG, yeah? What are we looking for? So first thing that I want to see is I want to see price break a key low, so we've got market structure shift, and then we want to see price retrace to a fair value gap, right? So on the 15 minutes here, we see price come back in, take the rejection, yeah? Comes back in again, rejects again. What we're missing in here is any fair value gap, right? The reason that we're looking for a fair value gap on this is because we're looking for that impulse move, right? We're looking for that aggressive move that leaves that inefficiency, because to me, it's telling me in this case that sellers are stepping into the market, right? Why do I like this one here and not these? We've just not got the fair value gaps. We get a fair value gap here, but what have we done? What did I say to you before? You don't want to take these if you've just run liquidity. So we've run that internal low, and now we're expecting a correction back up. But if I want to enter in here, I'm taking a lot of risk because we played this move down, and on the higher time frame, we're being supported by this fair value gap. Yeah. So I'm waiting for price to run up, take some liquidity. Yeah. So here we see we've come up above the fair value gap, but here we haven't had liquidity sweeps, right? What happens here? Price runs up, takes the liquidity, not just above these highs, but above this high as well. Now, remember we were talking about inverse fair value gaps on the higher time frame. We overlay the exact same thing on the lower time frames, all right? So nothing changes. Here's our bullish fair value gap, right? So if our expectation is for price to drive up to these highs, which ultimately we don't get, price rejects here, loses this, yeah? So we've now had a market structure shift here, right? So price has rejected now. We've come on, hasn't offered support. What did we get? Strong close below. Remember that I said about that? Strong close. These are all wicks, yeah? This strong close below, shifting structure, we're then looking for price to return where? To the fair value gap. And our setup would look something like this, right? I would look to enter on the low of the fair value gap here. So it confirms and closes on this. Then at the start of this candle, I've got a limit order placed on here, and my stop goes above the prior swing high, right? My first target is the clean internal liquidity target, which are these lows here. And then from there, I would ultimately looking to be managing out the trade to here and then here, all right? I would actually have some respect for the order block in here because of this expansive move higher. So that would probably be the ultimate target, would be the top of that OB. But I would be looking to trim some profits here and then looking at how price reacts down here. Yeah. Ultimately, I would be mostly out of the position there, right? But trade management's another thing for another day. I won't waffle on and kind of go on too much and make it too broad. But that's the principle of the setup, right? In the same way that we're looking for the same things on the higher time frame, we inverse a bullish fair value gap here, yeah, showing us that that's now acting as resistance. We get a strong move below it, yeah, meaning that this fair value gap, we're now looking for that to offer a rejection in price, right? And then from there, we're looking for it to trade to the next available liquidity, there, and ultimately lower. Okay, so I hope that kind of covers how we can use those setups on the lower time frames. If you've got any questions or anything about that, just reach out to me on Twitter, please, and I'm sure other people will be happy for that kind of question as well. I'll do like a Twitter thread on it or something, and then people have got something that they can reference. And like I say, this is how I look at the market, guys. All right, it doesn't mean it's the right or the wrong way. I'm sure there's better ways, more efficient ways to do it. It's just the way that's worked for me over a number of years. Right, so I promised that we'd also take a look at gold. Yeah? So let's finish up on that. Got it, also. You're very, very welcome, everyone. Carlo, hello, mate. I didn't see you sneaking there. Good day, the badness. Love to hear your romantic trading trend. Thank you very much. Love to be called romantic. That is awesome. Right, so we're going to finish up here on gold, guys, with a really, really quick top down, focusing on. So here we go. So we can see again, nothing doctored on the charts. We can just see that we had these equal lows here. The principle was we run these, we come back above. What do we do? Exactly the same thing, right? So, and this it doesn't mean that you have to get these, right? It just means that for me, this is what I would call like an A plus setup, right? Now, if I'm seeing a bearish fair value gap as we get here, yes, it is a really, really skinny one, right? But we are on the weekly, right? It'll be a lot bigger on the daily, etc. So we have that. First of all, we're expecting it to reject price. It does, yeah? So when we're in there, maybe we're looking to get shorts into these lows. They don't get run, but maybe some internal liquidity targets do, or maybe we lose. It's fine. We have to accept the losses, yeah? However, it doesn't change our bias or our theory that if price is now going to get back above this, as it does here, shifting market structure as it does so, yeah, then we're going to look for the inefficiency that's left, the fair value gap in its wake, to take trades in here. This is where we look for our long setups because we haven't run that liquidity yet. So that becomes an initial target. And then we also have targets above here. And ultimately, we're then looking at these order blocks here. These are joined candles, yeah? So the last up move before the shift in structure here. And we can see here that, okay, and this consolidation here. And this order block here that's pretty much still capping the market when we look at it. Yeah. Right. So that's our kind of high time frame theory. Now, what followed on from this is we got that expansion higher, we got this move, and then we drew up into here. The last time that we covered gold, yeah, we were looking for exactly the same thing up here. You see, I've got those dollar signs on there again. That was the draw. Remember, we just did it on one of the previous charts. That was the draw on liquidity down there. Also, this fair value gap that's looking to be rebalanced. So we'll leave that on there for prosperity's sake so that we can review that. Again, I always try and leave these things on the chart. If I'm wrong, I'm wrong. I've got no problem being wrong, guys. In fact, very often am and admit it openly. As traders, you're going to be wrong most of the time, more often than you're right. Yeah, and that's why we need good risk to reward. Yeah, because if I'm getting an average of 2.5 to 1 for every loss that I'm taking, then I can afford to lose more than I win, right? As long as you're taking care of your fees. Brawl. Thank you very much, bud. I'm not sure if you're the same Brawl that I know, but that Brawl is a legend, and I'm sure you are as well. So run that liquidity down there. We're currently holding the bullish fair value gap. Yeah. So as we can see here, when we're looking at structure, low, high, higher, high, higher, low, higher, high. This can just be setting this higher low before it ultimately looks to push up further. Yeah. Now, we've run these equal highs here, or these relative equal highs. So price is liquidity target. Let me just move this out of the way because that's not relevant to us here. We're going to be looking at this. Brilliant. Yes, you are. I don't doubt for a single second. So we've got this target up here. Now, we're holding this fair value gap. This is on the weekly. We want a little bit more context in this, so we want to drop it to the daily, right? And again, what we would have seen up here, right, is the same thing. So when price came up, this was the move that ran that liquidity in the highs. Once again, if we look at our inverse fair value gap, which I love to see, then we're looking for price to drop down lower. We had this beautiful impulse move below this fair value gap here, which actually we didn't revisit, so we wouldn't have got our setup on this occasion. Then price went on to run the liquidity targets here. Yeah, then we've ultimately had this consolidation that we can see has been quite choppy on a daily scale, certainly, and then price is purging lower. So we've taken out the liquidity resting in here. Yeah, price is holding in this fair value gap at the moment. And as we can see here, again, when we look left on a daily scale, we have our daily order block. So price is holding and respecting the order block here. We can see no closes below. It's now reclaimed it, right? Now, in terms of the price action here, a couple of things are on my mind. One, if we're expecting lower prices, then I would have an expectation that price is reaching up into here, right, which is our daily. I'm just going to put D in here so we remember. That's our daily fair value gap. So price is pulling up, being drawn up into this. Now, again, if we reclaim this, flip this, then we can look in here, lower time frames, change of market structure, up targeting these highs, right? Now, that's still quite a long way to go because we're on a daily time frame here, right? So we can now drop down to our 4 hour and say, okay, well, it doesn't change what our draw on liquidity is when we're looking higher. It's still clearly the daily fair value gap, right? So what would the 4 hour have taught us? And obviously, if I'd have been more on the ball and I was looking at gold more, my dear friend Bast, or Bast Trader, you can find him on Twitter, wonderful analyst that we have over at the Nest. Let's apply our same principles here. That was our bearish fair value gap. Overcome, leaving a bullish fair value gap. When we look at this price leg up here, in an ideal world, you want to see price draw down into discount. So where's our fair value gap down in discount? It's here. Right, and that's given us our long setup in here. Drew down into here, we drop that down onto a lower time frame, maybe a 15-minute or a 5-minute, something like that. And we can see what happens, right? Price draws down into our fair value gap, held at the OB. Inverse this. Price comes up. Here's our high, low. This is where we break the higher high, right? Now, this move was so fast and so expansive. I'm not sure on a 15-minute time scale we would have got into it. Possibly on a 5. Let's see if we got our inverse play here on the 5. So what do we see? Price comes up, yeah, and draws to rebalance here within this very small fair value gap. This becomes what ICT would call a intermediate term high, meaning it's a high that's rebalanced to fair value gap. Yeah. If we see this broken and we see a fair value gap left in its wake, that is what we would target for our long setups. All right. And again, we can see here low, high, higher, low. This is also backed up by our market structure break. So we can label that up. Our MSB long. We could have taken a long setup here with our stops below here if we were being very aggressive, or probably below here for a little bit of extra safety, especially when trading crypto. And that's what would have given us that really nice long setup higher. So post, fine, we understand what we were looking for. What does that mean for current price action? Well, it doesn't mean that we're looking for anything particularly different here, right? Like we said, if we want to see higher prices, we want to see a similar kind of situation play out. At the moment, we've just taken out this liquidity resting above here. So again, we can see we had those highs, prices drawn up into this. As it stands, we haven't really got a fair value gap here at the moment. Price is kind of holding structure, high, low, lower high, kind of coming down to set a higher low here on a macro scale. So this one at the minute is a little bit choppy. We've kind of got this consolidation range. Just pop out onto this quickly, see if there's anything cleaner. Well, I mean, price is kind of holding this 4 hour fair value gap here. Doesn't particularly look. So as we drew into this, we expected a bullish reaction higher. This at the moment is looking quite weak. I think if we see this breakdown from here, like we said before, and we inverse this, price then comes back down below. We get our close, we get our strong close below. Price retests this, I think, low time frame. We're in here targeting these lows and ultimately the lows further down. In terms of this moving higher, we can see it's currently holding structure, right? The only reason that I'm suggesting that is because if we look at what happened here, price had this impulse move higher, came into this fair value gap, yeah? Look at how bullish the reaction was. And once again, we had the same situation here, a little bit trickier to spot this one, right? Because it was so small. You can see price dipped into this, and look how strong the immediate reaction was. Now, this isn't an inverse fair value gap yet, so we need to make that. But you see how price came in, we kind of closed below it, came back above, price dipped back down and had this really bullish reaction. At the minute, this is a little bit messy for me. I think we've got some nice resting liquidity higher. We've got these beautiful equal highs here. So I think on the low time frame, I want to see this hold, and I'd want to see this high taken out, us come down into here, low time frame. We then get our market structure back, and then I think we attack these equal highs here. All right. So I hope that's been helpful, guys. Sorry, I know we've run about 15 minutes over on this one at the moment already, but it was a really, really interesting stream. Some great suggestions from everyone. A fantastic amount of you, tuned in for this one, which I really, really appreciate. It's been really great seeing some old faces, some new faces, some good friends from my dear friend Trader Danks group as well, which is lovely to see you. People like Touche and that. We had Mr. M on as well. Brawl, obviously, fantastic. H, it's been great to see just everyone, really. Carlo, I'm really sorry we didn't get around to taking a look at XVG. Maybe grab me on Twitter or something. I'll have a look and we can have a chat about it on there. If not, we can take a look at it on Monday. Crypto Boy, thank you for your great input. I mean, trying to go through everyone. We've had Yusuf on there as well. Carlo, Erica, brilliant to see you. H, obviously. Nemesis, Popescu as well, Nitpar, Jao, MM, who came on as well. Robert, thank you very much for joining today. James. I try not to leave anyone else. QBS, obviously, who's gone now because I know exactly how busy he is. Ahmet as well, who came on. Manny, Yuri, Whack. Jao, Sebster, great to see you on there. Darnock as well, who was on at the beginning. Rick too, and everybody else. Gordon from Bedford as well, fantastic place. Thank you very much, everyone. Please do enjoy the rest of your week and have a fantastic weekend. If you're interested in joining the Nest, you can find some deals, some free trials, and some goodies down in the description below. You can also get our calls for free. We've had a fantastic week. I think we averaged about 64% win rate last month for June, which was incredibly profitable at a very high profit factor. But ultimately, look, calls only is a way to kind of earn a little bit of money while you learn. I would just always say, guys, just please remember to invest in yourselves, your education, whether you find that with us or someone else. Yeah, Carlo, God bless you too as well, my friend. Blessings to everyone. Have a fantastic week, guys. I'm going to be back on Monday. Let's crush it. If you've got any questions, don't hesitate to reach out to me. Come and take a trial at the Nest. It's free. Or reach out to me on Twitter. All right, guys. Wishing everyone a truly fantastic week ahead. Trade safe, and I look forward to seeing you around the Nest.